ongoing thing.
Hello everybody, welcome to the channel. Today we'll be talking about a pharmaceutical company, Biogen. All the values will be based on Q1 2020 updates. The ticker is BIIB, and all the values I will be presenting to you are based on share price of $300 at the moment. So let's dive in. This is my presentation. Basically, I will go through all the revenue, the financial revenues, financial statements, give you a summary card via the DNA card that I call, and I will give you a little bonus and comparing Biogen with Johnson & Johnson. This is to give you an idea of how the industry is behaving, and then where is Biogen in this entire industry. So let's dive in. For the vision, this is something that I took from their website, basically showing them their different various, let's say, fields of development. Today we have only multiple sclerosis and SMA, muscle atrophy, spinal muscle atrophy, and also biosimilars. In the coming year, they will be looking at especially the Alzheimer's disease with the aducanumab and also other different products. This is what you can see here is their pipeline, let's say, schematic. And as you can see, many of the products are already in phase 3, and a few of them also on phase 2. The major future potential blockbuster that actually I'm looking at is aducanumab, which will be, let's say, confirmed by or not by FDA by Q3 2020. So it's very soon, and that's the reason why I'm trying to position myself on this company, potentially to have this share price increase based on this approval. Let's look quickly at the technical. Not very interesting, let's say, on the share price side, because the channel actually since 2014 has been very horizontal. No price change between 200 and 400, and that's a bit surprising because if you look at the different earnings per share for each year, they've been increasing from $17 up to $31 in 2019. How come this earning per share increased so much? Basically, their net income increased over the last 4 years, but also they did a lot of buyback, which actually boost their earning per share. What you can see here, just this anomaly here on this price drop and then price coming back up, is that here this aducanumab, this famous, let's say, potential blockbuster, the trial has been, let's say, simply stopped because not enough good results. And a few months later, they realized that they didn't put maybe enough quantity of this aducanumab to treat the plaque inside the ill patients. And they realized that basically there's a lot of effects if you put a higher dose. So they decided to put back this study back into track, and that's the reason why you had like this drop, and now you have this comeback. Here, basically, we're in the waiting period. Basically, on 2020 at the end, there will be the answer for this potential blockbuster. Let's go into the income statement. So what you can see here is that the company is benefiting from very good gross margin. They also have a very good net income, around 40%, super stable over the last 4 quarters. You can see also that the revenue is not increasing, so this is what potentially makes the say the share price not going up at this moment. Here is the revenue split per let's say medicine. The multiple sclerosis accounts for almost 50% of the total revenue. As you can see, these interferon and furosemide account for a lot, but the let's say revenue growth is not significant for both of them. One is 10%, one lost 7%. What was interesting for Biogen for, let's say, at least for the next quarter, will be the Spinraza, which is actually increased by 10% year over year, but also the biosimilars, which represent a very low amount of revenue, but increase significantly, for example, 72% year over year. So it's not increasing too much, but actually we know that it's not gonna decrease over time. Regarding the OPEX split, an interesting point is that even with this super high margin regarding the on the net income, they still have a very important amount of R&D investment. What does it mean? It means that the future revenue also will be secured with this revenue R&D investment. Now, looking at the balance sheet, I like to do the same, present you something dynamic so that you can see what is changing and actually what you can see, so that you can see the trajectory of each of these items in the balance sheet. First, what I like to look at is all liquidity that the company has, that you can summarize as a current asset, and the sum is $8 billion. Then after, what you want to look at is what is the working capital. So basically you take the whole current asset and subtract the current liability to give you a working capital. Here the working capital is 3.4 billion, which is very decent amount of cash. The other point I need to look at is the long-term liability. You want to be sure that they don't increase over time, which would mean that maybe the company is in need of cash. Here for Biogen, it's quite stable and it even reduced a little bit this long-term debt. Anyway, if you are very interested into this, you can also look into the 10Q and have the different maturity date for the, let's say, debt split amount. And it gives you actually like a better idea of if it's for next year, in 2 years, or in 3 years, or for example here in 20 years for this $1.7 billion. Now looking at the cash flow statement, this is one, let's say, part that I like the most because it gives you a very, very good vision of where the company is going forward. For your information, if you haven't seen my videos in the past, I split these revenue, let's say, segments by green operating, orange investing part, and the red part is the financing section. From the last 10 cases, I extract all the data and then put them here. So this is exactly here the same as here. For the last 4 years, you can see that basically the operating cash flow has been increasing from $4.5 to $7 billion. So it's generating more and more operating cash flow every year. Then for the investing part, what is interesting to look at is the CapEx. Okay. So basically this is super important because it will be a major component to calculate your free cash flow. If they generate $7 billion and here only spend $700 million for the CapEx, this is super good. And as you can see year over year, it doesn't increase. It's pretty stable. Just 1 year was a bit higher. I don't know exactly why, but basically over the last 4 years, it didn't increase, let's say, gradually. Then the last part that I like to look at is the financing part. This is very, I'd say, important to look at because in this financing part, this is where sometimes the company raises money or sometimes the company gives you money back to the shareholder. And for Biogen, the strategy is clear. No dividend. So you can see total cash dividend, zero, nada. But they spend a lot of money into buying back stocks, which is here retirement of stock. And every year, actually, they buy back even more and more. Why? Because they generate so much money that they can afford to buying back shares. And they did a very smart move in 2019 because the share price was lower, as I mentioned to you on the technical side. They took the opportunity to buy even more shares. And for the same, let's say, amount of money spent for the buyback, they could get these shares at much lower price, which made actually a big difference in terms of the numbers of shares that has reduced. 12% in 2019. Here in 2020, the only thing I show you here is just the first quarter, and then they already bought back 4% of the shares in 1 quarter. So it's just something amazing. This is something like very, that's going to boost the earning per share dramatically over the next quarter. The last point I'd like to look at is this number is from 2016 till now, they bought back 23% of the shares, which is massive. Okay. Now let's look at the DNA card, a summary card, basically where first exercise is to calculate the yield return. Yeah. So how do I do? First, I want to calculate the enterprise value, which is like actually a better figure compared to the market cap, because you take into account the liquidities and also the long-term debt and also the long-term investments. Enterprise value here is $72 billion. Now let's look at the earning. And usually I subtract the capex or the depreciation to the earning just to give me like the idea of how much free cash flow they generate. But basically in the income statement, they already consider this depreciation. So basically the free cash flow is equal to the earning. Yearly earning is $5.8 billion. And that's why when I divide the free cash flow by the EV, this is where I get my yield return, and it gives me around 8%, which is really, really good. I have the same result if I only consider the last quarter results and multiply by 4. So we won't expect, let's say, any move over the next quarter in terms of yield return. Another point I like to look at is if we remove all the R&D expense of 2.2 billion, it will give us like a free cash flow of 7.5 billion. And if I do the same exercise, I will come back with a yield return of 10%, which is very, very good. Like, it's awesome. So I'm very happy with this return. Now let's move to the price metrics. This is something you can see a lot into all these analyses online. And what I look at first is the EV to sale. EV to sales is a bit more accurate than the price to sale because it takes into account all this liquidity and debt into the calc. But basically, EV to sales of 5 is decent for a company that generates a 90% gross margin and 40% net margin. So I don't think it's overvalued. Just the price to cash is a little bit high. Usually you want it to be at 10, less than 10, but the company is generating so much money that it doesn't need to have so much cash in hand. Okay, so that's why they prefer possibly buying back, for example, shares. So I like it. Possibly could go up to a EV to sales of 8. I would not be surprised. So there's like a bit room for upside. Now looking at the efficiency of the company, it's really good. So I mentioned already the margins, but I like to look at also at the operating revenue per employee, which is $1.7 million per employee. Be aware that any company that like average company has usually average revenue per employee of $200,000 per year. So here is just amazing. Now the last point that is for me the most important is operating leverage. How do you evaluate the operating leverage? It's basically don't look only at the revenue growth, but look also at the OPEX growth. If you have to spend $1 million, let's say, OPEX more to generate $500,000 or $100,000 more in revenue, this is not efficient. So basically the net income will start shrinking. But here is the opposite. The revenue growth over the last 3 years has been 26%, but they spent only 16% increase into OPEX. What does it mean? It means that even if the revenue growth is not significant, the leverage actually itself is super high. So look, you have a good company that has actually very good yield return that will secure you the floor price value. So it means it's not going to drop, let's say, less than $290 for me. But at least you have already an OPEX operating leverage that can kick anytime over the next quarter, which gives you even more net income. So this is for me a very, very good DNA card. And then because of this, I'm happy to invest into this company. Now let's start with the battle. So music, Biogen and G&G. This is very like a small bonus that I give you. It's just to give you an idea of, okay, if you are compared to this like dividend, the kayaking, very famous a company that everybody is sure about and wants to hold it for 30 years, what is really behind these figures? So I did the same exercise as he did for Biogen on the DNA card, and this is what you get. Bit complicated to explain, but basically I will go through the yield return. Biogen here 7%, Johnson & Johnson 3% only, twice less. EV2 sales 5, Johnson & Johnson 5.3, similar. Long-term debt divided by yearly earning, 1.5 here and here is 3.6. Means that the Johnson & Johnson has more debt, okay? Also, in terms of revenue per employee, I mentioned $1.7 million per employee. Johnson & Johnson only 400,000, so it's less efficient. Net margins 40% for Biogen, only 28% for Johnson & Johnson. So again, Johnson & Johnson is less efficient. But now, what is the most important is operating leverage. 26% increase, only 16% OPEX increase. But the revenue growth here on Johnson & Johnson only 14%, but the OPEX growth is 24%. What does it mean is that if the company is continuing like this, Johnson & Johnson will have shrinking net income. What does it mean? It means that this value, this earning, will decrease and decrease over time, even if the revenue growth increase. Overall, 7 for Biogen and only 1 for Johnson & Johnson. So the game is over for Johnson & Johnson. Now let's look at the conclusion. Basically, the pros for the company is 1, a solid balance sheet, 2, a second is an excellent cash flow generation, 3, a generous buyback that will boost the earning per share over the next quarters, 4, a low float. So as you can see here, the institution own 94% of the shares. So basically, what is available for the general public, like you and me, only 5% of the shares. It's very little. What does it mean? It means that in the future, if you have any share price change or any news, like for potentially for this blockbuster aducanumab, it might just spike. Okay, so this is something very interesting. And also, for me, this is like the most important is this potential approval by the FDA at the end of year for this aducanumab. And as you can see, the Alzheimer total addressable market at the moment is considered as $12 billion by 2026. And as of today, there's no real medicine to treat this Alzheimer issue. So imagine the potential upside for the share price. At the end, I will finish by the cons, okay, related to the COVID-19. Biogen mentioned a few points into this, the last thank you. Supply chain doesn't seem to be disrupted too much. They still continue their discussion with the FDA related to the aducanumab, but the clinical trials might have a little bit of delay. But overall, this is not anything, let's say, dramatic, because the revenue is still secured for the next quarters. So I hope you enjoyed. I will leave you back with the DNA card here. If you have any comments on this analysis, if you don't understand anything or something in particular, just let me know. If you also have a very good idea for shares that you would like to get analyzed, just let me know in the comments, and I will look at it. So I hope you enjoyed, and I see you on the next video. Bye bye.